All right, good evening, guys. Ken at Tortoise Capital. It is the nightly strategy podcast for November 29th, 2021. So I want to give a shout out to Z. You know who you are. We had an extended discussion. Was it yesterday or Saturday? Saturday, I guess it was. Or maybe it was yesterday. Yeah, yesterday. And repeated, Saturday and then repeated Sunday on what to do with the market in its condition with all that volatility happening and the shock to the price system and all those signals for channeling and overreaction firing in the broad indexes. And so we went through that in about a 20-minute market analysis discussion. If you go back and listen to that again, you're going to hear the principles of the multi-time frame, multi-lens analysis being conducted. We looked at multiple times, and we were looking at various statistical measures in the 4 seasons of MACD and the RLCO framework, support and resistance, did some contingency planning, and essentially achieved the zero state by framing the trade in both directions. So what happens invariably, and Ken H points this out in his Research Weekend presentation, which is excellent and worth the price of admission just by itself. He points out that the act of framing in both directions, answering all the standard framing questions, puts you in the zero state, meaning you have zero directional bias. What you have is a directional appreciation for what the trade can do in both directions. And you have a plan to trade possibly in both directions, to include doing nothing. I mean, that's a decision to not trade. It is a trade in one direction after all. And so Z did his work like he was supposed to. He considered his point of view, goals and objectives, framed out his trades, decided not to go short, took the channeling signals that were generated on Friday, thinking carefully about the stops, and bought at the market open and locked in about, looks like 1.5 R on the opening today, from the opening today, which is pretty nice. Perfectly planned and executed. So hat tip to Z. Steven's in the room tonight. I want to go right to his. He's a couple weeks into the foundations course and made the following trade. All right. So let me frame out that blue line, blue arrow was yesterday's. This was yesterday's, or I guess Friday's. And then there was a large gap up, sharp sell off. I don't even know if I call that sharp, a sell off. And if you look, that didn't even penetrate to the statistical high of yesterday. It got pretty close, but that's the statistical high. It only got that far. So now when you see the RL10 roll over and start to move up and cross the dragon, you have an RLXD, you have the PSAR flipping from here to here. He notes, could this have been an entry? Yeah, that's a supported spring crossing kind of an entry. I would consider probably maybe a more technically correct is a COTA 2, because if we look at this now, we take a look at yesterday's belly of the dragon. Today, the belly of the dragon right from the opening, and then a higher low again. You essentially have like a COTA 2 type of a formation, And then that makes this at the PSAR flip a high priority entry. So you could technically get long here. And now I want you to notice you're getting long just south of the Bollinger Band mean, which is a good thing. And you're 30 minutes into the trade. So now you can see this is where the gap now disappears and the Bollinger Bands pinch, because that's what happens at the 30-minute mark. They get kind of narrow. I will say this is perfectly played here, though. You get essentially, notice that the RL10 here doesn't even flinch. It holds right here and resumes. So that is a great entry. That is a great entry, and he's using essentially the Bollinger Band mean for the stop. It could have been the PSAR, but that's a reasonable stop, because if this is going to work, it shouldn't come down and violate that, and it didn't. Now he gets a move to here. Now notice that once again it holds, doesn't even get to the spine of the dragon or the edge of the river, and he puts his stop right in there. Nice. For a second position. Notices the P1, tightens his stop, probably using the PSAR dot by this time, trailing with the PSAR, and makes a perfect exit. Now notice this is actually also a 1, 2, 3 exit, because you have bar 1, bar 2, and then bar 3. That is a perfect sniper exit, and that's how you get 6.1R in the second week of the foundations course. Now, what I would note is that if we take that first trade with the standard stop, then that one probably adds one additional R. So that one would have been about 5R. From here to here is a 5R trade. So that's 6.1 could have just as easily been an 11R trade. But I want to circle that entry. That's like on the long side. That may be my favorite setup. I mean, I prefer collapsing dragons, but that may be the best pattern of all. That's so good. We're going to make a flashcard out of it. And Stephen, you've got it. You understand the foundations course right now on the second week. Don't make it harder than that. That's the pattern you want. So just nicely done. All right, let's. So Friday we had this horrible, terrible, not good move down, and then we framed it in both directions. And what we ended up getting was the recovery scenario, which was a pretty significant gap up, momentary sell-off, nice strong move back to the spine of the dragon, and then closed above the Bollinger Band mean with a slightly higher close than the open. So that's actually pretty good. A pretty solid recovery, and the cryptos crushed it today. So in my view, this is another just yellow zone trade status here. I mean, we're one day away from a move just like that. That should not surprise you if we see that tomorrow. It should also not surprise you if you see the same size move. Whoops. But now looking up, and then that would take us up to the PSAR. So that is a perfectly reasonable, rational set of moves in either direction. That makes this a critical state once more. See what we have. It's a second day of recovery. or what. So what I think you can do if you're an intraday trader, what I will do, since I'm an intraday trader, is I'll put like a a tentative box on this thing here. I'm going to put it in blue and just say, in that blue box, if it starts moving up towards today's high, I'm long. And then if it breaks out above today's high, let me put that in here. If it breaks out above today's high, then in this direction, I am in that region. I'm definitely long, and I'm ready to swing trade it. And then if it gets above the hump of the RL10, I'm really in favor of that thing. And then if it breaks above the previous all-time high, I couldn't be more bullish than that, right? So that's kind of how I play the upside by regions. Similarly, on the downside, I'm probably like this, tactical short to there. And then if that fails, Katie bar the door, and we are as red and swinging as we can be. Right. So that's what the regions look like to me. So it's a little more grinding on the way up. And that's just a recognition that, the downside moves happen quick, fast, and in a hurry. So there we are. I think the Saturday lesson was foundational, not just in terms of how to frame the market in those conditions, but the mental process we went through with Z in order to develop a personalized trading plan that was appropriate for his personal objectives. So there's not one straightforward way to trade these things. The architecture of the trades are the same, but how much risk to put in, what time frames to use, what percentage of the total portfolio to have at risk in the various time frames. All of those are individualized based on individual objectives, skill sets, and so forth. So I was really pleased to see the good question and then Z following through on it. So just well done across the board. Let me know in chat if you found that helpful. All right, let's look at the sectors. So here's the S&P. So you'll notice, 1.23%. It is a it is a monthly summer, and the blue dot means that it is a daily fall. So it's still above the zero line, and it can recover, and that would make this kind of a kata 2. The longer term trend is up. There's been a temporary pullback on the tactical trade. But that's what you would expect. This green dot, blue dot looks like a kata 2 on those two time frames. And there's a number of symbols that are in that. So you would, XLY, which is dominated by Tesla, is in that condition. As is Microsoft and the Qs and lithium batteries. Whereas you can see Alcoa is not as strong. It's a monthly summer, yes, but it is a daily winter. So that's not so good. You'd rather see a daily fall. So now you have XLK Tech is in that condition. Materials are in that condition, green dot, blue dot, and so forth. So let's see, quick way to use TC2000 to get some insights. All right. Let's see. So we had diamonds at 0.62, emerging markets 0.39. The Russell was slightly negative to flat at minus 0.06. Treasuries gave back 0.8, which to me is another sign of more strength in this market. The tactical defensive play of treasuries, which was big on Friday, gave back today. So that's a rotation from people out of treasuries as a short-term hedge and back into the market. Let's see, so that's what else we got? And the Qs were the best today at 2.17. So the strong sectors came roaring back today. All right, let's see. Oil exploration, clean energy, S&P discretionary were big. FANGs up 1.7. Lithium up 2.25. S&P tech. So that's old school tech. That's mature tech, better than the Qs. So that should tell you something there. Blockchain 2.8. Tesla up 5%. Yow. And then here's the big winners were the diamond hands in, as Elon would call them, in the crypto space. Symbols that worked. Coinbase, Tesla, Devon Energy, Alcoa, Apple, Microsoft. So there's some names in there. The dominators are dominating. Microsoft and Apple in tech. Devon Energy in the energy sector. Tesla just crushing it. All right, things that underperformed. Oil, Mexico, wheat and precious metals, energy and materials only up 0.5. Moonshots, finance, consumer staples up 0.25. The two lumbers were basically flat along with blended commodities. In the red for the day, Brazil, ARC Innovation. That's troublesome for ARC fans on such a strong day for ARC not to have follow through is an indicator that, again, it's the old school tech, not the disruptors that were winning today. Agriculture 1.15, ARC Genomics, S&P Bio, marijuana. Now, note the big losers were a couple other things that we framed out. We framed out this weekend VIX, Cliff, and U.S. Steel. Those are down 4.5. We're going to take a look at one of those, I hope. John Deere, Robinhood, Virgin Galactic -3. TX, the steel company, down 1%. Let's see. So yesterday we framed this little move in Cliff, and it did nothing but just get crushed right, it gapped up high, and then this is the argument for the frog box, right? As soon as you put a little frog box around the open and say, which way are you going to go? Now, watch what happens. You buy the short, or you sell the short, as it departs that yellow box, and you take a look at the intraday trade. This is what you get. You get the big gap up. Let me get my pen here. So here's the, this was the market close yesterday. So right here. So this is the big gap up. And then there's your frog box short, 20 cents. Normal, 1%. And that thing, you might have maybe gotten out of, somewhere in one of these tests of the PSAR dots, or you might have waited for the managerial exit. If you take the managerial exit, that's 5R. This move to here is 5R. And that is the hybrid frog. It gaps up, you bracket it, and you buy the, or you enter at the breakout of your risk box. But then I want you to notice there's a supported spring crossing. Here's another supported spring crossing. There's a CATA 2, all getting back to the VWAP. Notice how the VWAP acts as this giant magnet. And then once it gets to the VWAP, kind of stays there. All right, let's take a look at the, let's look at the trade frames from today. Here was one I did. I don't think we got to from Friday. I think this may have been Friday. Rio Tinto. It got posted late. Gap down, morning hook, buys the breakout, gets paid 0.4. The re-entry might have been here, because when this doesn't fail further and then starts taking off and it takes out the emerging dragon, you can probably get it here, but still that's pretty good. And then is managing the trade carefully. Takes a 1-2 exit, get paid for an R. Nothing wrong with that. This was a reasonable CATA 2. We might have gotten it here on a 1, 2, 3 and a break across the direct, but I don't mind that. I think you want the 1, 2, 3 and breaking the RL10 peak gets you in a fraction earlier, but still this is a good exit. So 0.9R, get paid every day. This one here is a Z3 pinch. And what we call the fake one, and then go to. So when this thing rolls over and doesn't collapse down to the VWAP, then you can take a 1, 2, 3 entry, take the PSAR and get in that little pocket move, 1, 2, that's even a second entry there, and then take the PSAR exit. So we call that pattern the Z3P, fake 1, go 2, that it starts cruising along and then makes a dip and then go. Or it might be cruising along, take a bump and then fail. That fake 1, go 2 is a typical pattern, and that's why we're always ready to stop and reverse. And we don't have a directional bias on us. We're just following price. Okay. All right, getting into today's trades. Here's Luke. Perfectly played at the break of the previous day's VWAP. I think, personally, with this big gap up, I think we could have gotten it here, but still waiting for this to clear. I don't have any problem with that. That makes this like a collapsing dragon. I think when this did this, there was a potential second entry there, because by that time you've got 2R in hand. That's a pretty good exit. Yeah. So my point is, this acts like another collapsing dragon right here. You did get this collapsing dragon. That's fine. After 8 bars where it doesn't fail further, still that's pretty good. That trade didn't lose any money. This is a reasonable effort. Scratch. You got paid. Scratch. Scratch. Nice move to the downside. And that's how you get. That's 5.5R. That's 5R going short on a large up day. So talk about finding the movers. Holy mackerel. Devon Energy. So this also featured a nice big gap up, which it couldn't hold. Notice the rollover and the dragon rolling over. This is a great short in this little pocket, like a collapsing dragon right there. Gets paid, tries again. So those two essentially scratch. Good short here. We might have taken this on the PSAR flip. But I don't mind waiting for the dragon to break. So I consider that a collapsing dragon. That's a good trade. Now, this one, we got a Z3 pinch. This one is what that fake 1 go 2 looks like, right? So if you just extend that across, you see it breaks down. It doesn't collapse big, but instead rolls over and rolls back up. And then if you just scratch that one and take the PSAR flip, you get this entry instead of this one. I also like this here because this rolled over and started to roll up again. I like that as either a first or a second. See, I think you got to take this one. That's the SSC. And that's the second entry, like a Kata 2. Still, that's a good trade. This is a good scratch. Good scratch. Here's another little fake 1 go 2. There wasn't much in there. You wouldn't have lost money on that trade. But still, positive day, going short on a big up day. That's pretty good. This is the one from Steve that we already saw. So just super. Really well done. Yeah, framing the trade in both directions today. Framing is how you get into the zero state because it sets aside the bias. And you guys proved today that the podcast work and the trading and framing that we do on the weekends pays off with preparation. Lather, rinse, and repeat. Well done. You can hear my huskies howling out in the background. Might have some raccoons out there. Let's see if you went home. All right, let's go to dashboard 1. So we're bullish normal, overbought short term. We're only below average here on the 10-day, still at 43. Had a little bit of a recovery today. Risk Z is still warning us abnormal volatility in play. That makes the swing to the upside really strong, but it reminds us a collapse to the downside is not out of play. But diamonds and mid caps on the high priority, high reliability channeling and overreaction systems. How good are they again? Telling you got to get long when it's uncomfortable to do so. That's what they do. Only a handful of dojis, plenty of auto framers still in play. 1 5DD in new core steel. On the ETFs, just a couple dojis, still plenty of auto framers. Look, there's one. Gold is at 7.6. Asia less Japan at 6-1. I like materials at 3-1. Plenty of auto framers to work through. Notice all of the internationals at the top of the stack because they had lost the most during the sell-off from last week. Only Nike on the squeeze. Dominated by fall and winter once more. But here's where some strength is. Procter & Gamble, Apple, and Home Depot. Nothing in danger of being overbought on the 10-day. That's the short priority. So the coyote continuing to be opportunistic. Nice little recovery. Slope is back to normal. And that's everything we got for today. Nice little recovery here. This almost feels like a Kata 2 style formation. And the slope of the 30 has come back inside the yellow and it's almost back to normal. So the upside, the steam has been blown off. And so now the upside move is still available. All right. All right. That's everything we got for today. Let's get this published and posted. And thanks for your hard work and your attention to detail and for keeping the faith. Steady hands. Well done today. I think you guys did a marvelous job.